Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the No Closer Show. As always, Scott Carson. Jacked up today, guys. We've got a very special guest on here, a buddy of mine, known for a few years now. Got to hang out with him a couple times in
Hmm.
Newport, Rhode Island, and Boston, Massachusetts over the last couple years. And just honored to have him on here. I think he's going to be, well, not I think, I know he's definitely going to share some nuggets with you guys out there that are investing not only in notes, but distressed asset and working with distressed borrowers out there, people that are facing issues. Who am I talking about? I'm talking about the rock star out of Rhode Island, the guy that's doing amazing things all across the country. He is one of the brainchilds, the chief bottle washer, the head trainer from WickedSmartRealEstateCoach.com out there, guys. He is just a phenomenal guy. It's my buddy Zachary Beach. What is going on, Zach? How you doing today, bud?
Scott, excited to be here, my man. I appreciate that head bottle washer. Yeah, I mean, I've done it all for sure. So, no, this will be fun today. We got a lot of cool stuff going on right now.
Yeah, you know what I love about it too? You and I have a similar background of being in the bartending space. I don't think you'd ever stop being a bartender wherever you go at some
Nope.
point. So the chief bottle washer is what I always say when I see something like that, because you end up doing everything. But you've been an investor for a while, and you
Uh-huh.
have a little bit different kind of, you know, how should we say this, diving into it, almost being drafted, I guess it would be the best way to kind of say it a little bit, huh? Can you explain how you got
A
started
little
doing what
bit.
you're doing now?
Yeah, for sure. Yeah, over a decade now, I've been investing in real estate. It's all these gray hairs. People usually think it's my kids, but it's like each real estate deal I did gave me another gray hair. Yeah, so I was a bartender and personal trainer about a decade ago. I was trying to figure out a way to change my lifestyle. I was about 24 years old and I was getting super burnt out. So I actually approached my father-in-law, Chris, who was getting out of the 2008 crash. And, I needed to create this new business model to get back into real estate, which was, back in the day, they called it buying and selling on terms. Now it's buying and selling on creative financing. So he started that. So I approached him and I said, "Hey, I don't know if I'm going to like real estate, but it's going to be better than what I'm doing." So I slapped another thing on my plate and I started cold calling, in the hours between like noontime and 2 o'clock after one of my power naps, and just started in real estate that way. And eventually, it took me about 6 months to get my first deal. And at that point in time, I saw a proof of concept. I kind of burned the ships and got out of every other aspect of my life other than real estate. And it's been ups and down ever since, but wouldn't choose any other way.
Yeah, it's so true. I mean, getting in at the downturn is the best time to get in. You may think differently because of all the rigor mortis and all the other things that happen. And I know Chris's story. We've been through a couple ups and downs and stuff like that, and basically having to start over from square one and ground zero again allows for you to correct the mistakes you did, but also, I think you're a little motivated because the ships have been burned, right, Zach?
Oh, for sure. Yeah, and really, I was looking for something that I could kind of hang my hat on. I mean, I was growing up, I didn't know what I wanted to do in life. Quite frankly, I did a majority of things because my teachers told me I couldn't do. So, like, the only reason I went to college is because they were like, "You can't go to college." So I was like, "I'll show you. I'll go to college." But then when you get to college, you're like, "I have no idea what I want to do." So I did what every, smart, intelligent college graduate does: is they go become a bartender. So, I was a bit floating out there, and I was trying to find out what was right for me. And I knew entrepreneurship as when I was a young kid, I used to sell golf balls on the golf course for a dollar, which is insane because I was leaving so much money on the table. So I knew that was, inside of me. So then I think when I started to find real estate, I was like, okay, I can start to see where this could play out as, I became kind of my own boss, even though I had partners. I was able to kind of run my own schedule and I was able to make as much money as I was able to personally grow. So, that it started to fit in that context. And now, of course, me and Chris have built a portfolio. We've sold the majority of our portfolio. I'm building another portfolio, and we have this amazing coaching company, which is impacting people all across the country, which has been fun to grow over the past about 11 years as well. So it's certainly been a journey.
That's awesome. Yeah, and you guys do a tremendous job. And what you guys do works so well. What we do in the note business is why we partner up on different things.
For
But
sure.
now that you look back over the last 10 years and you're coaching people,
Yeah.
what are the fears that you see pop up the most that you have to kind of chuckle because you're like, oh, I felt that at one point, or I went through that. What's kind of the biggest three hurdles or facades that people put in front of themselves to avoid taking action and finding success?
Yeah. Well, I think what leaves most people on the fence day one is they don't make a decision. I've tried to instill that in my 7-year-old son, as he always is like, "Dad, I need help," and I'm always like, "Remy, you just got to make a decision and commit instead of sitting on the fence because you never know what's going to happen unless you commit." So I would say a majority of people, before they even decide to even join coaching or doing anything, they usually need two questions answered. Number one, does this actually work? We've tried to, every single month as we've done more and more real estate deals, tried to provide proof of concept so that way people can get off the fence. And then number two, does it work for me? And that's why we've really, created some additional I call it lower end programs, so that way people can get a peek behind the green curtain, which we called our apprentice. So that way, they start to see they can do it. They might not be able to see every aspect of the real estate business, but they can see like, I understand the actions and I can see myself doing it. And, this isn't, rocket science. It's about putting in those action items consistently. So those questions always need to be answered. And the faster we can help somebody answer those questions, and the more likely they're going to, get into real estate. From there, though, I would say number one thing is we need to set realistic expectations. And I feel like a lot of people have unrealistic expectations. They're watching a lot of Instagram, they're watching a lot of YouTube, and quite frankly, they're seeing people that are like many years into the business seeing success, and they're wondering like, why am I not accomplishing that success? And you even see some of those people that have the stories like, hey, I got my first deal in 30 days, or I made $1 million in 12 months. But they don't see like all the struggle that came in with everything before they got into real estate, or that they might have, used a different technique for a long period of time and it just didn't work out. And then they stepped into this one, and now they've kind of pulled those skill sets and that experience. So setting realistic expectations, because most people then feel as though they're failing, which they're not. They're actually, growing. And then it's the inevitable actions in which they take that eventually lead to results. I know I'm going off on a bit of a tangent here, but I even talk about in our community, I say, like, it's hard when we say at the beginning of the year, like, oh, I want to get this many deals, I want to make this much profit, because all of those things are lag metrics. They actually can't control it. You don't know how many deals you're going to get and how much profit you're going to receive from those deals. So instead, I try to teach more, or as a community, we talk a lot about more of like minimum standards or like daily action items, because it's the phone calls, it's the conversations, it's the offers, it's the appointments. Those are what you can control. And then it just eventually becomes a numbers game. As your skill set improves, now we can get better numbers. So really that's like a main point that a lot of people get lost in. And then that always leads to, mindset challenges. And then they don't believe that, that they can actually do this business, yet they're actually making progress, but they don't know it until the deal happens. So it's a lot of that we work through, which I'm sure you work through in your community too. It's 90% mindset, and it's trying to create an environment where, like, it's not just about dollars and cents. It's about creating a skill set you have long term. It's about building something long term. And if it takes you 6 months, or it takes you 3 years to get to your first deal, as soon as you can get there, now it's just about duplication, and you just continue to grow from there.
So true on that. People, we've always found that people have no patience. They want their instant gratification. What do you mean?
I don't have patience either. I get it.
Oh, it aggravates me. Yeah. And what do you mean I got to WORK? What do you mean I got to work to do that? And that's the big thing. I know you guys do a lot with calling borrowers or calling distressed owners, stuff like that. We do things when we're contacting banks. Yeah. And people say, well, this doesn't work. I mean, what do you mean it doesn't work? How many calls, how many dials did you do? Yeah. And they say, well, I did 10. Well, that's not enough. I mean, come on. I mean, you got to put the time in. And everybody, I love what you said. Everybody comes from a different situation, and that we all know that this stuff works if you'll just build your skills, build what you need, or outsource what you're not good at to get somebody to do, and then you focus on what you're good at. But hiring a VA to dial for you, or to reach out to people if you're not good at it or don't have the time to do it, you still got to do the basic activities. So either do it or find somebody else that can do it for you, right, Zach?
Yeah, because then it becomes inevitable, right? It's not if, it's when. Unfortunately, we don't always know when. Um, because it just everybody has a different path in which they're coming to fruition. I can give you averages, but it doesn't mean that that's you. And what's always interesting is if you give somebody averages, they always think they're better than the average.
Yeah.
Yet when they come in to do the work, then they're like, oh, almost I'm okay if I'm not, at that average point. So, and I say that because even though we could set realistic expectations on someone's behalf, and look, I'm just as guilty as everyone else. I look at the next person, I'm like, I'm obviously going to be better than that. But then we start to realize as we do the work, there's a lot of things that we weren't prepared for. Maybe the skill sets weren't there, or maybe we have challenges mentally, or like there's a lot of things going on with our ego, or our self-belief, and quite frankly, a lot of those things pull on it way more than in self-worth than the actual activities. It's because then you go home and now you got to tell your wife or your husband or your kids, like, hey, dad's working hard at this. I've been putting a couple hours in every single day, and we haven't got that result yet, and still be able to have that confidence to say, all right, yeah, I'm just getting a little bit better. I'm getting a little bit better. I'm getting a little bit better. Because then it becomes inevitable, as long as they stick with it. The only way you can fail in this stuff is if you quit. I'll make one last point. I get a lot of and this isn't to like continue to beat up the people that want to get involved in coaching. It's just more of setting like a reality. I talk to hundreds of people all the time, and they'll come in, and a pretty common scenario is, Zach, I'd like to make somewhere between $150,000 and $250,000 a year in real estate. And because that's probably, it's in the higher salaries,
Yep.
but it's usually a good lifestyle. And quite frankly, if you want to live in the United States nowadays, especially like along the coast, or even like where I live in New England, like you have to make at least 300,000 to even have a decent life, at all. Like they always say like the million, like the 10 million is the new million. Like it's like, just to make $1 million nowadays does not mean that you have like this fantastic life anymore, especially if you live in expensive places. So they'll usually say that, and then I usually ask them like, so how much do you make? And they'll be like 50,000 or 75,000. And then I'll usually say to them, okay, so just so you're aware of how this works is you need to bring double the amount of value to the marketplace in order for you to make 150,000. So that means that you have to grow almost twice personally in order to make that 150,000, because none of us have found, unless we got lucky, none of us have found a way to make more money than we deliver in value. And then usually they're like, okay, they don't get the concept at first, but then when they come in, they're like, okay, wow, I'm providing solutions to sellers, and I'm providing solutions to buyers, and I'm solving problems, and I'm like, now wholesalers and realtors are now seeking my advice in order. Now I'm like, now you're going to start to become a lot more wealthy than you used to be, because you're bringing significant value to the marketplace. But that takes time, and it takes effort, and it takes, frankly, a lot of work, a lot of things. They talk about character. It's what you do when nobody's watching. Like that's where this comes into play. And then eventually one day, you become wealthy at real estate. And now that we've said all this, nobody's gonna do real estate anymore.
Well, but it's the honesty approach of it. It's not blowing
Yeah.
smoke up somebody's ass.
Yeah.
It's not showing them falsified things. It's like it takes work to do what we do, and it's not for everybody, and that's a-okay if it's not for everybody. But that's the biggest thing. Like I love what you said, because my mentors have said that too. Hey, if you want to go from $50,000 a year to $100,000 a year, you got to develop that $100,000 mindset. If you want to go from $100,000 a year to $500,000, you're doing different activities. You have a different mindset about things and what you're doing and delegating. And people are notoriously cheap about spending things to help them take it to that next level. Training, mindset, reading books, listening to podcasts, or going and getting coaching to help people go from 0 to 60 in 6 months versus 6 years. You know what I mean? And I know you're passionate about coaching and mentoring, and just like I am, because it's helped us get to where we're at. But let's shift it a little bit here. You're also, you and your team are also talking to a lot of folks that are going through different things and working to get them to work with you and your team to create a win-win scenario. Win for them, in moving or selling the asset and a win for you guys as well too. Can you talk a little bit kind of about what your niche is and what you guys focus on, and we can go from there?
Sure. Yeah, we've been buying and selling real estate on creative financing before it was cool. Now it's cool. Like everybody wants to talk about creative financing, and quite frankly, most people don't know what it is still, but it sounds great. So yeah, we've been buying on creative financing, and really what that means is that we solve problems that the traditional market typically can't solve or chooses not to solve. And we do that by these couple strategies. One, seller financing, where the seller's the bank. Instead of going to get a bank loan, or buying a property subject to the existing loan, meaning we just keep the existing debt in place that the original seller already had, and we will make those payments on their behalf. Or a lease option, which means you just control the asset without ownership, which gives you the ability to then go sell it. And we sell all of our properties on rent to own is our primary exit strategy. Now, all of that, what all that just means is that when I'm communicating with a seller and I'm identifying that their problem is not going to be solved by the traditional market, or they're choosing not to, then all of a sudden I just look at, all right, what's important to them? Where are they? Why are they selling? Where are they going? By when? And what's the finances attached to the property? Like, what makes it a good deal for them? And now that we have all that information, we can now solve it with one of our solutions, because most of the time, a cash offer at 60 cents on the dollar is not a solution that they want. And quite frankly, sometimes like even listing the property on the open market with an agent isn't the solution that they want. So then you have like all of this, like all these people that sit in between those two, scenarios. And then what happens? They don't have a solution, or nobody's providing them an additional solution past what they've been taught their entire lives, which is go list the property with an agent who's most likely a friend, because especially during COVID, every single person on this planet was an agent. Yeah. And then you go listen in, and then they have a choice that either sells right away, which would be awesome, right? That's the most ideal sense. Or it doesn't sell, and now they have to keep lowering the price, or they have to go do what everybody's recommended. You got to go fix up the kitchen, or you got to go, upgrade this and upgrade that. And just some people that's not the solution. So instead, we go and we say, look, I can actually buy this property directly from you. Here's one of the 3 different ways we can work together. And if these make sense, now I'll just go ahead and buy it, and they can now move on. And then we provide an additional, support to the buyers that can't qualify for bank loans. And that's how we make money.
Yeah. And you're right. People love the fact that we had low interest rates and everybody could get finance previously in a lot of days, but now you have to get creative. You can't sell it traditionally. People overpaid for assets as values were going up, and a lot of markets have corrected. Yeah. So you have some folks that are a little bit underwater, or you've got folks, too, that have to sell property, but it needs work. There might be equity, but it needs a lot of work. I like what you said. 60 cents of value isn't always a good deal. It might be for the good deal for the person buying it, but It's not necessarily solving that equation for the people that own the property or living in it at that point, right?
Yeah, and there's just a lot of things there's a lot of variables that come in with selling a property. Like right now, I'm working through a deal, and this is a little bit of a mixture. It's going to be a sub 2, and we might actually flip it in general, but it's a probate. So I get called in. I had a wholesaler friend. He then prospects, called an agent. Agent's like, well, there's this deal. The seller's just going to let this thing go because her mom passed away, and she doesn't really want to pay money for probate. And, there's a hoarder type situation. And she just doesn't want to go spend a whole bunch of money if she doesn't think she's going to be able to make money off of it. And I was like, okay, well, let's dive in. So we started to dive in, and we started to discover, okay, well, there's a first mortgage on the property, and it's like $150,000. She's behind like $7,500. So I was like, great. All right. Well, that sounds pretty reasonable considering ARV on this property is probably $600,000.
Wow.
Then I said, all right, well, you told me there was multiple liens. Now there's a secondary lien. It's a personal lien, meaning that somebody had a discrepancy with the woman that died. Yep. And they put a $190,000 lien on the property with some interest. So I was like, okay, well, that's going to be negotiable because the seller already told me I'm either selling to you guys or I'm letting this thing go to foreclosure. So now it's a simple conversation with that lien holder to be like, hey, I'll give you 50 cents on the dollar for it, because if not, then the numbers don't work for me and you get nothing. So let's try to figure out a way where it all works out. So if that ends up happening, now I'm below $300,000 in a market that's ARV is say 600,000. And it's not that I do some flips every year, but it's not like I'm constantly training our community members to do this. But I mean, $100,000 into this property, even $150,000 in this property is still $150,000 in profit. So I was like, okay, well, let's try to figure out a solution through this process. So that's a deal that I'm currently working right now. But that's just a prime example of like, that's the cookie cutter market is not solving that problem. No, this is somebody that like we got to dive in and we got to look at all the different layers of it in order to create that profit. And because we're able to do so, as we can see, there's lots of profit left on the table once it's been completed. But just most people aren't going to think through those types of creative solutions.
Right, exactly. What are kind of the lead sort or the lead stuff? Probates, FSBOs, rent to own. What are some of the different leads that you guys target with your
Yeah,
stuff?
we actually don't do a ton of probate. Quite frankly, that just kind of like fell in my lap. Primarily expired listings, because when we buy our like I say, 90% of our properties, they're nice, move-in ready properties. That way we can go sell them on rent to own right away. So expired listings, love those. They were on the market at one point, didn't sell, right? So now they need an alternative solution. So now we get to step in because they're still motivated. For sale by owners, they think, right? The reason why they're for sale by owners, they think they can sell on their own. So now you kind of play towards that because they don't want to necessarily pay commissions or closing costs or things like that. So we buy those. Pre-foreclosures are huge right now. You always have to be careful on how you market to pre-foreclosures, but there's lots of lists out there that associate with that. Referrals from realtors. I'm seeing a huge amount. There's a couple offers I made just recently of deals that are on market that are saying, I want to do seller financing. Mm-hmm. So now we're just reaching out to those agents on market or even directly to seller if they're a FSBO saying they want to do seller financing and structuring deals. And then, of course, wholesalers and things like that as well. So there's just, over the past 10 years, this is the most amount of leads I've ever seen where like you could just literally step outside and you might see a creative financing deal right now versus, I was digging for like the first 5 or 6 years because I had to educate everybody on it. Like our entire team did. Or if you're a brand new investor in creative finance, like you had to educate everybody. At least the market's a little bit softer now. The problem with that, that's positive. The problem with that is there's a lot of people doing deals that they're doing it the wrong way. And that's actually why, me and Chris have doubled down and I'm traveling all across the country many times now because we got to do it the right way. So that way we don't have, legislation and stuff come in that eliminates this awesome solution for people. So it's about doing it the right way as well, which is really, really important. So yeah, those are some of our main lead sources. Then from there, we work them through our process.
Mm-hmm. Now you guys have I love it, the 3 payday system.
That's right.
That you guys are well known for. Can you explain that to our audience out there? I know what it is. I have my own 3 payday, but your 3 payday system I love.
Yeah, for sure. It's the way in which we've always set up the business is we buy creative and we sell creatively. If we look at our main business model. So I kind of walk you through how we acquire them. But how we sell them is we actually sell to people. It's roughly 82% of the market cannot walk into a bank and get a loan. It's like 75% of Americans have a 650 credit score or less. So that like automatically takes out like 75 people in order to get decent bank rates. And the majority of the properties right now, we have an affordability issue. So now you have all these people that want to be homeowners, but they can't. So how do we provide that solution? Well, we buy them correctly on creative financing, right? So we had good debt on the property and we get good seller financing terms, which allows us to say, all right, we can make some money from this deal. All right, well, now that we can do that, we're now going to go sell the property to somebody that needs a rent-to-own program. We then collect our first payday, which is a non-refundable deposit. So that's anywhere from 3 to 10% of a elevated purchase price. So that means I sell it day one, I get a nice large non-refundable deposit. That's how you pull some equity off the table. That's how you risk averse. So they give you that money. Then payday 2 now is the monthly cash flow, right? That's what majority of people stick with in real estate. They want cash flow. Yep. And this is the most passive way for cash flow because, outside of notes, because I'm not, I'm not being their landlord. They're a buyer. They just need time to qualify for a bank loan. So they take care of any and all responsibilities. They're just paying me the money every month and I'm making sure that if there's any debt on the property is being paid. That's your payday 2. And your payday 3 is eventually this buyer is going to go qualify for that bank loan. If we're doing everything correctly and our buyer is also doing everything correctly, we've now set up a mortgage readiness plan. Now, when they're mortgage ready, they go get a traditional bank loan and they go ahead and cash us out. And then usually there's a good chunk of change at the end when it closes out. And that's known as your payday 3. So you get paid today, monthly, and then when it cashes out.
Yeah, it's not only just the difference in what you bought it for and what they're buying it for, it's also the principal write down as well adds that to that, which is nice.
Down. You get you can automatically create equity in deals because you can even buy something today that has no equity and manufacture equity because you're selling it to them on, say, a 3-year option, which means I'm going to elevate the purchase price today. And then now I can pull some profits off the table because they're going to give me a non-refundable deposit. So now I'm actually pulling out some of the elevated purchase price or the equity. And now I place them in the property and now they work towards becoming a homeowner.
Yeah, exactly. I'm sure you're seeing an increase in subject to deals as well, too.
Oh, yeah. It's like, my personal portfolio is probably 90% now is that, or subject to with a seller financing second, where you have like a combination deal. But yeah, those are massive right now. And it's because of what's happening right now, because people bought properties for the interest rate. They didn't buy them for the purchase price. They weren't doing that. And quite frankly, a lot of them were done with FHA loans. And we all know the smaller amount you get into a property, the less likely you're in default. And the FHA rates, and again, I'm not like the bank guy. You're more on that side, but I mean, I believe they'll do up to like 40% or even 50% sometimes on like your debt to income ratio on that monthly payment. So it sets people up to fail in a way, or it really is a very risky scenario. So what's happening is now all of a sudden, if somebody misses a payment or they're falling behind, or one of the spouses loses a job, or now all of a sudden they can't make their mortgage payments, but there's good debt there. So now savvy investors, especially ones we train now, go to them. We say, all right, well, let's see how we can structure something where we will start making those payments on your behalf. We'll keep that good debt in place because that allows us to actually sell the property and still make a profit, which gives us the incentive to go sell on rent to own. And we can help the seller get out of a bad situation because they're no longer able to keep up that mortgage.
Yeah. Well, that's the great thing. So about 14% of all FHA mortgages are in default right now. Like you just said, it's insane. And they just released that, the previous administration was paying millions of mortgages on the FHA. Borrowers are behind to avoid this tsunami of distress stuff happening. But one of the most powerful things when it comes to a person's credit score, one of the most powerful things is 24 months of on-time mortgage payments, right? Yep. And it's also one of the worst things if you have late. It'll kill your credit score. I mean, in a foreclosure, if you let a property go to foreclosure, it's going to kill your credit score for 7 years. If your mortgage late's 24 months. So that's the great thing about taking over somebody who's been behind a few months on their FHA, their credit score's shot. They couldn't go buy anything right now. You taking it over and helping them build their credit back up by taking over that debt and keeping it from going to foreclosure, allowing them to kind of get out from underneath this albatross that they probably weren't ready for to begin with because they got in with 2.5% or 3% down and things changed on them. It's a great way for you it's really creating win-win scenarios then for both parties.
Oh yeah, for sure. And I'm glad you bring that up because I mean, obviously you've been in real estate for double the length I have been in, but most people ask, like, why would a seller sell you a property subject to? Well, that's one of the examples because we're professional investors. So we're going to make our payments on time, which is actually advantageous for the seller because it's still tied to their credit. So now we actually improve their scenario by making payments on their behalf. And now they're going to be bankable way sooner than if they defaulted or they go into foreclosure or they do a short sale. Short sales kill me right now because I'm like, if I just knew your scenario 3 months ago, right, you would have been out of it because we would have been more than happy to catch up your payments and allow you to walk away and not have to pay anything. And yet now you have 7 years, right, to like get back into a property. And instead of their credit going significantly down, it's going up. And now they're more bankable. And the good news is we can actually show that somebody else is servicing that loan. So it actually will help your debt to income ratio, which means you can probably go buy a house at some time in the future. And so it's just like these things go on and on and on. This is why I'm glad that we keep digging further, because these are the scenarios that the traditional market can't solve, because a wholesaler or a retail buy or a fix and flipper or anybody else, they're not going to go buy those properties because they don't have a lot of equity in them. There's no way for them to make that money unless they're keeping the debt in place, because they're now replacing it with higher interest rates. So now that property doesn't cash flow.
Now, when you talk about cash flow, what are you guys looking for as kind of your minimum level of between what's being paid and what you can make either on a rent to own or an owner finance deal? Is there some, I know it varies if whether you're in California versus Akron, Ohio, but if you look at some, what's the kind of the minimum percentage amount that you guys are looking for to put in there in place for you?
Yeah, it's a great question. I always tell people you got to look at these holistically, because there's deals in which I make no money, or we are making less, like we're subsidizing, yet there's lots of equity in there, or we received a huge non-refundable deposit, right? So this still ends up being a $75,000 deal. That's why the 3 paydays are important. It was actually funny. One of our coaches is up in New Hampshire, and he was arguing back and forth with Nick, who's my brother-in-law and our seller specialist. And Nick's like, look, Rick, the only way we're going to get this thing sold is if you pay $25 a month towards the mortgage. And Rick is going back and forth. He's heated. He's like, Nick, I'm not doing that. These properties need the cash flow. And then, so he goes to Rick and says, Rick, can you please like deal structure this out for me and see how much money you're making on your paydays? And Rick outlines it's like $84,000. He goes, do you think you can subsidize like $400 a year in order to make $80,000 over the next 3 years? So it's all about, it's holistic. If I looked at an average, though, I would say we on average make like $300 to $500 a door.
That makes sense. That totally makes sense. Yeah, because it's going to vary on the financing, the setup, and rates for rents or rent to own, stuff like that. All varies. Kind of when you look at selling on terms, what kind of down payment or deposits are you looking for as a percentage? I know the correct answer, as much as you can get.
Yeah,
but
sure.
but let's talk about 5%, 10% down. What's kind of the average that you see across the board out there?
Yeah, I'll dig in that. I know when people hear like, well, as much you could get, and they think, because that's the first thing I did. I was like, yeah, because obviously investors, you want the most amount of money today, right? But it's actually one of the number one determinations on if they're going to be successful in the rent to own or not. So we want to make sure they not only put down money up front, but they also have more option deposits over the course of their lease for 2 reasons. One is we want to keep their feet to the fire. You'd be surprised someone will pay you $20,000 today and forget about it in 3 years from now. So, and that doesn't keep their feet to the fire. So that's why we keep doing it. But 2 is the more down payment, because it is credited towards their purchase price, the less bank loan they have to get, and the more the bank sees that they put into the property, which means that they're not only just going to get good loans, they should get the best loans. They've lived in it. They put down somewhere between 10 and 20%. And the market might have appreciated. So now they're getting good loans on these properties. And sometimes bank will even treat it as like a refinance because they've lived in the property for quite some time. So to kind of wrap up that answer, we typically want to see at least 3 to 7% down today, but up to 10 to 20% over time. So what I mean by that is like if we sell a property for $300,000, let's say we collect $10,000 at the closing, right? The formal lease time before they move in the house. And then every 6 months, we might structure, say, $5,000. So now over the course of, say, 2 years, they're $30,000 in, right? Now all of a sudden, they have a good sizable deposit. We're creating we're gathering lump sum, so it's good for us, but it's also great for the buyer to show to the bank. And again, that's what's going to help them qualify for better rates, which means they're more likely to actually go get a bank loan.
Yeah, it is. So then they're willing down, so for that 95, they're now at 90 or 85, depending on the appreciation of the property. But that's a much more secure loan as an ex-banker that banks will look at, and they'll rate term refinance in a lot of cases or something like that. They'll be excited about that because there's that skin in the game and the payment history showing that this is a good, solid borrower. And a lot of people forget about that. And that's the great thing. People get so caught up in, well, I got to have 50 grand down. Well, I don't have 50 grand, but I got 10 grand down, and I can put 5 grand every 6 months or something like that to make things happen. Just getting creative and keeping an out of the box mindset is important. I also want to kind of reiterate that, though. How many times do you feel like you're banging your head against the wall with realtors that have a very closed, inside the box mindset?
Yeah. I mean, but the fact with that is that's going to happen in some markets, right? It's going to happen with some agents, right? It's not that I'm going to sit there and say every agent is going to want to do real estate deals.
Right.
But I think it's the ones that are creative, and the ones that also kind of see the writing on the wall. If, in my opinion, if you're not able to niche down and work with investors, a lot of these deals don't make it to market. And then eventually, I would think with everything that's happening, that eventually agents may be non-existent, or at least only the good ones are going to survive. Like the ones that bring a ton of value to the relationship, like the connectors, and the ones that are extremely good at marketing, and the ones that are maybe high-end luxury. Like there's going to be some very niche down ones that are always going to be around, in my opinion. But it's like the everyday, like I do 4 deals a year or something like that, where it just doesn't bring that much value. But if agents niche down and say, like, look, I want to really understand how all these transactions can work, so that way I can bring multiple solutions to my sellers and buyers, well, now they're going to bring so much more value to the table. So, and it makes the transaction more smooth because now they attract somebody maybe like myself or one of my community members, and now they're able to generate multiple deals from us as well. Because the truth is, if I buy a property and I get a referral from an agent, if anything happens with this buyer and I default or they default, if I'm going back to market, I'm going back to the person that gave me the deal. Or I'm saying, hey, go find me a tenant, find me a buyer that can't qualify for a bank loan right now. Let's cut you in on that side of the deal too. So, because there's plenty of profits to go around. So yeah, I would agree with you. I mean, there's a lot of closed-minded people for sure, but it seems as if, at least from a gut feel trending, that a lot of people are now at least interested in how to create these other transactions. Because if not, they're kind of they're getting moved out of a lot of deals.
Well, yeah, they've had to get creative. They have to go outside the box because the old bread and butter way of working, doing the things of just buying, listing a property and letting it sell traditionally is non-existent. Higher interest rates, and then the issues of all what NAR has created for realtors out there too is making it difficult for things out there. Now, you've got very good team there, really great team, amazing community, stuff like that. Can you talk a little about some of the training that you guys do, or when your next workshop is for folks out there that want to learn or dive into this?
Yeah, for sure. And then I'll make sure that you guys get access to our Amazon bestselling book as well. We'll ship it out to you. Yeah, we've really created this community around the premise of we want to do more real estate deals. That's why, I mean, our mission is to be known as a community that transforms dedicated people into wicked smart real estate investors. This isn't for everyone. This is for people that actually want to go out there and build a business and either create great supplemental income or build a business to retire on. It's really creating something that's going to be, worthwhile for you and your family, not just the person that wants to go ahead and, just learn, which is fine for some. And for others, like this is about getting in the trenches. So we built it around that premise. So we have anything from courses to what we call the apprentice, which is a 90-day group coaching program where we literally walk you through the first 90 days and help you set up all your systems, get you good at the initial skill sets. But we've really built this community around what we call the associates. Now, the associates are people that we work with anywhere from 18 to 36 months. It's all application only because we're literally in the trenches with them from like initial phone calls to our coaches jumping on phone calls and doing 3-way calls to structured deals to negotiating to the paperwork to selling the property, you name it. It's almost like a quasi partnership. And that's really where people are going to see the most amount of, results and success because we're along the ride with them to help them kind of go through their first anywhere from, 1.5 to 3 years, which quite frankly, is what it takes to get a true business off the ground and create consistency.
Yeah, it just does take a while, but you guys are so very hands-on and helping people take it to the next step. Those first 90 days are always the most intimidating time when somebody's learning something new because that's where the most amount of Q&A comes in. And I love the fact that you guys do weekly office hours or Q&As. And you've got a great, Slack that you guys also use as a message board for people to ask questions about deals and phone calls and stuff like that too?
Oh, yeah, for sure. And it depends on where you're working with us and the experience you're going through. But Yeah, everything from, we're doing Zoom calls to we do in-person events that we do basically every 6 weeks at our office. We'll allow 15 to 20 people to come. We literally work in your business for 2.5 days in person, making phone calls, structuring deals, sending out and putting together KPIs, all the way to really building a business long term as well. And yes, we're always connected by Slack. So that way, in between every single aspect of what's happening in your life, you can always hit us. So that way we can always be, right in the trenches with you.
Yeah, we'll make sure to put the link into smartrealestatecoach.com there in the description for you guys to click on and check it out.
Yeah, if you want to grab the book, our Amazon best-selling book, Real Estate on Your Terms, you just go to wickedsmartbooks.com/Scott. That's wickedsmartbooks.com/Scott.
Yeah, we'll put that in the chat roll for you guys, or not the chat roll, but the description and the link as well for it too, directly there for you. Zach, what's your goal for the rest of 2025? I know it's hard to figure out in a lot of cases, but I know that you're a guy like me, goal oriented and got some things rocking and rolling for you. What's your big focus for the remaining, hard to say, 8 months as we come to the end of March here relatively soon?
I know it's wild. Yeah, that mission will drive us all the way until the end of 2026 with building out our community and helping transform people's lives. So day in and day out inside Smart Real Estate Coach, we're just constantly fine-tuning to increase the amount of deals per associate and increasing the profits per deal, and even more importantly, decreasing what we call time to first deal, which is from initial phone call with your coach to getting your first property under agreement. I mean, those are our main things that we're always getting after, because I would love one day that we have 100% success rate with every one of our students and they get a deal within the first 30 days. We're not quite there yet, so we're going to keep focused until eventually we get there.
That's great stuff there, Gory. Really great stuff. Well, I appreciate you hopping on here, sharing your wisdom. Guys, you and listeners out there, I don't bring people on unless we absolutely love what they do and it aligns with what you're doing, and they are good quality individuals. And we can let Zach slide on 2 out of the 3.
Yeah,
you know what I mean?
Exactly. Yeah.
But no, guys, check it out. Well worth your time. smartrealestatecoach.com, and we'll put the links in there for you. But if you're interested in distressed real estate, if you're interested in creating lemonade out of lemons, then definitely that's the place you go besides here at the Note Closure Show. So, Zach, thank you so much for coming on here. Have a great day. We'll see you at the top, buddy. All right?
Hey, thanks, Scott.
Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get the lists of notes from banks, hedge funds on a regular basis, not 1 or 2 or 3 or 4, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day 1 is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day 2 is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day 3 is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th, online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilets, sinks, and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.